Welcome to the Leaders Insights podcast. Today's episode, building an equity story that holds up under scrutiny. Every CFO thinks they have a compelling equity story. Then an analyst asks one question and the whole thing falls apart. Why?
Because most equity stories, the narrative you tell investors about why your stock is worth owning, are built backwards. People start with the share price they want and reverse engineer a story to justify it.
Give me an example of that going wrong.
Peloton in 2021 is the classic. The story was, we're a subscription business with recurring revenue. Beautiful. Then someone noticed the recurring revenue depended on selling more $2,000 bikes forever, and the whole thing came undone when hardware sales cratered.
So the headline number was real, but the assumption underneath it wasn't.
Exactly. An equity story is a stack. The top is the number everyone quotes, say 20% revenue growth. Underneath sit the assumptions holding it up. Analysts don't attack the top. They attack the base and watch the whole thing wobble.
Walk me through building the stack properly then. Where do you start?
You start with the one or two things that actually drive your value. For a software company, it might be net revenue retention, how much existing customers spend this year versus last, including the ones who leave. If that's your engine, your entire story has to defend that number.
And most CFOs bury it in slide 34 instead.
They bury it because it's the number they're least sure about, which is precisely why a good analyst goes straight for it. If you're hiding your load-bearing wall, you don't have a house, you have a stage set.
Okay, so I've identified my key driver. How do I make it survive hostile questioning?
You pre-mortem it. Sit in a room and ask, if I were short this stock, betting it falls, what's the sentence I'd say to my investors? Write that sentence down. Then build the rebuttal into your story before anyone asks.
That sounds like inviting people to punch you.
It is. But you'd rather take the punch in a rehearsal than on an earnings call in front of 40 funds. When Adobe moved to subscriptions back in the day, the bear case was, you'll trade a big license fee today for tiny monthly payments, and revenue will fall off a cliff. They said it out loud, showed the transition math, and it built credibility.
How specific does the evidence have to be? Because everyone brings a cohort chart.
Specific enough that it can be checked against reality. Don't say customers love us. Say customers who've been with us 3 years spend 140% of what they spent in year 1. And here's the cohort, the group who all signed up in the same quarter, that proves it. A number that can be falsified is worth 10 adjectives.
What about the numbers you genuinely don't know? The future is uncertain.
Then you say the range and the trigger. We expect margins between 22 and 26%, and the swing factor is how fast we hire in Europe. Investors don't need certainty. They need to know you understand your own business well enough to name what could break it.
Doesn't that make you look weak next to the CFO promising a straight lineup?
The CFO promising a straight line is the one who gets destroyed the first quarter reality intervenes. Credibility compounds like interest. The boring, precise CFO who hits their range 4 quarters running earns a lower cost of capital, cheaper money, than the visionary who misses twice.
Is there a tell that a story is fake? Something a listener could spot on a call tomorrow?
Watch what happens when someone asks, what would have to be true for this not to work? A real story has an answer ready. A fake one gets defensive, repeats the headline louder, or pivots to the addressable market. Volume is not evidence.
So if I do one thing this week, what is it?
Write down the single sentence a short seller would use against your stock. If you can't write it, you don't understand your own story yet, and the market will teach you the hard way.
The sentence you're most afraid of, written first. That's the whole game. That's your 5. The full CFO track, structured, no fluff, is at mba-training.com.